Welcome to the Professor Lending Institute, where we make sense of housing economics and the home buying process. I'm Jordan Steffaniak, president of Professor Lending, licensed loan originator, and your home buying expert. And in today's episode, where I'm excited to introduce you all to my friend Michael Babcock, we're going to be talking about insurance, particularly commercial as well as personal insurance, and just a whole lot of useful nuggets, especially for those who are in business-related fields, thinking about sales tactics, thinking about just how to build high trust relationships with people, and what all that looks like in a regular basis. This is a lot of fun. Me and Michael go way back, and I've got a really good relationship with him. And so I really enjoyed this conversation. I think you will too. Today on the Professor Lending podcast, I'm thrilled to introduce you all to my friend, Michael Babcock. So Michael and I actually go back a long way. Michael and I grew up in the same town. I went to the same church, and then ultimately we were at the same college for a period of time together. We overlapped. And so we've got a lot of a history together. And him, and I guess your dad too, you can tell me about what his experience in this industry is, but have been in the insurance industry for a long time. And one of the things I like to do with this particular podcast is introduce consumers to a wide range of aspects, as well as industry professionals in the housing industry. So while we're focused primarily on housing stuff, there's a lot of different slices that impact it in various ways. And so part of what I love to do is educate people and get them a sense for like how everything works together, what the different pieces are. So Michael, I mean, maybe before we just get started, like tell me a little bit about your background. What do you do now? How did you get into this particular industry? And like maybe what do you think is just really enjoyable about it?
Yeah. Jordan, good to talk to you, man. I know we were talking before the podcast and it's been way too long. We can blame it on kids and distance or whatever, but we got to do these catch ups more often. Just so you guys know, Jordan has been very influential in my life. Is somebody that I look up to, somebody that poured into me a lot while I was at Liberty University. Part of the reason that we ended up there. And I'm excited to do this podcast with you. So I've been in this industry for 5 years now. Our agency was started by my father about 15 years ago. He came from Farmers Insurance. I was there for about 15 to 20 years as well, was a district manager there and decided to go independent. When he did that, he started from scratch, wasn't taking over anybody's portfolio, really worked it into what it is now. We have 5 employees. Him and I are both in the game still. He tells me every day he's getting more and more tired, so he just throws more work on me, but that's part of the fun. That's part of being 30, right? So you just jump on board with that. So at Liberty, I studied business finance, found myself in banking pretty much immediately after college, did commercial banking. On the underwriter side for 5 years. I was at a regional bank, and then I went on with the national bank. We did security alarm lending, think Vivint, ADT, Brinks, and really we're in that space. And then COVID happened. And then at the same time, our bank decided, hey, we don't like this space anymore. It has too much leverage and we don't want to have your guys' portfolio anymore. So they laid us off, but they gave my part of the team a year runway. Well, COVID happened. So I was working from home. I was trying to figure out what I was going to do next, newly married at that time. And it seemed like it was all kind of pointing to my dad and I had talked about, hey, maybe you can jump into the family business at some point. And it was a perfect time to do it. My workload was relatively light. I was working remote and I just jumped over there and kind of did both things at the same time and really just cold called all day. Just cold calling businesses, hitting up my contacts, asking if I can quote their personal insurance, and found a lot of success with that. That's how my dad started it. He had previous contacts that he was able to pull in. I'd say lead generation business wise, that's definitely transformed since then, but I do miss the days of cold calling and knocking on doors and doing the whole thing. It was good for us.
I don't know many people who say they miss cold calling.
I
What
know.
did you find
Crazy.
appealing about it?
You know, so I kind of like to think it's a little bit of gunslinging. It's a little bit of Wild West. You're like, you don't know what you're going to yourself into with every call. A lot of times they don't pick up because people are pretty good at vetting numbers nowadays. But you get on the phone with a business owner, and if you really get engaged with the business owner, the cool thing about both our businesses is that you get to sit down with a client, and it's a high trust business, right? So you're trying to establish trust from the very get go, and if you can do that, you'll be successful. And so my best cold calls and the businesses that I ended up typically transferring over, or the personal lines that I ended up transferring over, I was able to establish that high trust relationship immediately, get down into what are your problems, like what's going on, how can we help solve that for you, and then get them to buy into what we're selling. So it wasn't just the products we were selling, it was, they're buying into us.
Yeah, no, that's good. So this is helpful. This is some like to me, this is like transferable stuff across whatever industry you're in. One of the things I want to know is when you're calling these people and you don't have a relationship with them, do you have a script or you do just wing it every time and just kind of like see what they say?
Yeah. So it's funny you say that. So when I started the cold calling, super nervous, like I'm coming from underwriting so much more numbers. Now, a lot of those commercial underwriting skills transferred to what I do now, but more on the analytical side, less on the relationship building side, right? So I was really nervous. I didn't know what I was going to say. Actually, getting a script in place and then like role playing with another coworker inside of our agency allowed me to be able to get more confidence. And then it was just a matter of doing it. So like it's probably the first month or two I would follow the script just like exactly. But as I got better at it and I just got more fluid with doing it, I would just kind of like I knew my intro line typically. I'd hit that intro line and then I'd just let it ride. So my big goal more than anything was to ask like a question that hit their problem, the nail on the head with their problem. And if I was able to do that and get them talking more than I was talking, then I knew I potentially had a sale right there. I didn't know where it was going to lead. There's still a lot more that on the back end that has to be done. But I knew that if I could get them to the point where they already trust me and they look at me as a listening ear and somebody that can actually potentially solve their problems, then I already beat 99% of the issues that I'm going to run into on the cold call. Does that make sense?
Yeah, no, that makes sense. So I guess did in your mind, did you like know on the front end, like here are the key problems that most people are encountering, and I'm going to try to get them to answer a question related to one of those to uncover that?
A little bit. Like I would ask specific questions that would make them think. I'm more so trying to reveal pain points, right? So I'd get it like, okay, let me give you an example. Like, hey Jordan, this is Mike Babcock. I'm with Babcock Insurance here in Edwardsville. It's been a while since we've talked. I called you about a year ago. You might have been interested in our services then, but we weren't able to connect for whatever reason fully. I wanted to reach back out and see if you'd be interested at this point. Uh, and that they might say, I don't know, like maybe things are going okay in the business. What is going wrong potentially in your business right now? Is that something that we could help with? And then maybe they're like, well, my insurance costs seem to be increasing about 20% every single year. I'm having trouble retaining employees because I don't have the proper benefits in place. Stuff like that could be revealed. And as soon as you hear something like that, now you have a hook. Okay, hey, I could potentially help you solve that problem. And here's how. Or hey, let me get all these problems in place first. Let's have a follow-up conversation with all my solutions, right? And so once you get them on the line to not only like give you your problems, you say you have solutions, and then you also get them to transfer all their information to you, because that's the hardest part about our industry is like getting somebody to actually push the information that you need to you, because there's a lot that you need. Once you do that, you have buy-in. And so if you get buy-in, you're actually potentially able to convert them as a client.
Yeah, that
The
makes sense.
easiest way to actually get past that, and the reason I haven't had to do cold calls as much since I started, is once you have a portfolio of clients that trust you, they start referring you. So the easiest way to get past all of those problems that you could run into with a cold call is to be like referred to, because once you're referred to, you just hurdled all the trust problems from the very get go. You're no longer the stranger that's calling them on their phone. You are the person that like knows everything and was able to fix this problem for one of their friends or whatever. Right. Does that make sense?
Yeah. No, it totally makes sense. I mean, I can relate in a lot of ways. I cold call a lot of realtors, especially
Which is
because
good.
naturally for me, that's one of the easiest connection points to finding people who are trying to buy a house. And I found like I have way higher success rate if I have a reason to call them. So anytime I'm working on a purchase transaction, I may have never met the listing agent who's selling the house. As soon as I get that contract, I look for their information. I give them a call, and I have a reason. Hey, I'm working on a transaction with you. Let's make this a good experience together. Let's work together.
That's
And I found that
awesome.
that makes it just like that hurdles all the trust issues because I'm already sort of a partner to this, and I'm not trying to like annoy you, but there's some level of cold calling. You're gonna have to call a bunch of people, and you're gonna have to feel awkward sometimes. And the success rate overall on a true legitimate cold call that's not warmed up in any sense is pretty low. But like if you're committed and consistent, so like how many hours would you commit to it when you first started
When
doing
I first
this?
started, I would make hundreds of calls a month. Hundreds. So my goal was always I'm going to make 50 unique phone calls a week, sometimes more, sometimes less, depending on the workload that I was getting in from those calls. But yeah, a lot of awkward conversations, a lot of following through on what you said you were going to do. Like if I got connected with a business owner and they said they were interested and then I am not able to connect with them, like for whatever reason, we weren't able to do a full on conversation. And I wasn't able to connect with them for 2 or 3 more calls. I would still just keep calling until they said no, especially if I thought it'd be a good business for us. So yeah, a lot of diligence on that part. Now the I like the sales process from a home buying perspective. I look at it from a downstream perspective. You have your realtor who is the most client facing, right? Like they're the person that is taking you through every single step of that home buying process. And I think that they end up with having the best trust with the client just because they've literally had to go through every single thing. They help set up their inspections. They point out defects on the home. They really open the eyes for the client to the home that they end up purchasing. Now the realtor needs the mortgage lender to be able to fund that purchase, right? So they're working very hand in hand. And then the mortgage lender, the next part of the downstream needs an insurance agent that can actually make sure that the insurance cost stays in line and meets the replacement cost criteria so the loan can actually get funded. Um, so I tried to connect with realtors too. I have more success with commercial realtors than home realtors in general. But mortgage lenders, we have a better success rate with because they need us. Like it's typically the mortgage lenders that I work with are just thankful that you get insurance in place for their clients so they can make sure that the loan gets funded. Has that been your experience in general?
Yeah, that and then just like speed is one thing because oftentimes clients that I'm working with, they won't select their homeowner's insurance until like late in the process. And it's not just that I need the insurance document. I also need them to up to date the mortgagee clause, which it's a clerical thing. It should take you 15 seconds. But if an insurance agent isn't quick to respond on that, that can delay closing on my side and cause all sorts of friction with all the different parties that I want to maintain good relationships with. And so for me, just speed is one of the big things that makes a difference for me to make sure that I'm getting that updated correctly and quickly.
Yeah, and I think one of the biggest difference between your industry, the lending side, and then our insurance industry is we have the ability to make pretty quick changes. So really, like if there's a delay, it's typically your insurance agent that's delaying it, just to be totally frank. Now, sometimes you have to get underwriter approval and that can take a while, but those are unique instances. On the personal line side, most of the time, the systems for each carrier are automatically approving these things. You, as the lender, you have all these closing documents that you put in place. So if closing gets pushed, that's a huge problem because you have to recode everything, re-input all the numbers, change the dates, get your title company to change their stuff. Like that's a lot of man hours and not worthwhile for you. Like when you have a closing set in place for a certain date, you don't want to change it again, I imagine, right?
Yeah. Oh, I mean, I never want to once it's set, I don't want to ever change it. It is there's a lot of paperwork involved. Even though I'm not the one redrawing it myself, like it's still like I always want to have eyes on the entire process to make sure nothing's missed, to make
Right.
sure there's no issues, there's no gaps or delays because you got a lot of different people hands too many cooks in the kitchen. I mean, it's got to be that way to some degree, but if somebody drops the ball, it can be missed. So I'm like always kind of like watching it all even though I'm
Right.
not the one doing that part.
Well, and also like you said, like for you to be able to maintain good referral relationships, the only way for you to actually do that is to follow through on what you've said that you're going to do. Right. So if you tell the title company and you tell the realtor it's going to be on a certain date, they book that in their schedule, they draw up all their docs, and then you drop the ball on something, that, and I'm not saying that's going to happen with you. Jordan's perfect, guys. Like, you should do everything through him. But, if that happens, hypothetically, of course, like they're gonna be ticked off potentially about that because it creates extra workload for them and it makes the sales process a lot less seamless. And everybody just wants to get it right the first time because it's easier for everybody. So yeah, I,
So, I
I
mean,
find that like the realtor, the home lender, and the insurance agent are all kind of a symbiotic relationship.
so one thing you did mention earlier that I wanted to make sure to come back on was the high trust piece that you had mentioned. In what ways were you able to show I am a high trust person, I work for a high trust company, and you should trust me without having any prior relationship with them to demonstrate that?
Yeah. So I've thought about this term when I first started a lot, and I'm thankful for it because I think it highlights that like some of the legwork wasn't totally on me. My dad was in this space for 15 years, 10 years in the independent agency prior to me jumping on. And then he was with farmers for 20 years prior to that, all in the same location. Like, people know my dad. And the funny thing is we have the exact same name. So like sometimes I'm not even exaggerating. I'd call people and they'd think that I was, my dad, and I just wouldn't say anything because I was hoping I'd get a sale. I needed the money. Like, I have a family to provide for. And I'm just
Yeah.
like, yep, that sounds good. And then I'd show up, they'd be like, oh, I thought you were gonna be a lot older. No, that's my dad. So I mean, like, there's pros and cons to having the same name as your dad in the same business. But yeah, that like name recognition goes a long way. And I probably don't even fully understand the benefits of it, right? Because it's not like, I think that's a subconscious thing to a certain extent. Like, brand recognition and name recognition is subconscious. It potentially lowers barriers before you even have to do anything with that conversation. Like, oh, Babcock, I recognize that name, so I'm willing to talk to him. I don't know exactly what he's talking about, but that I think that helped a lot. I think the second part of it is just like, if you're specifically talking about cold calls, I think there's a certain level of confidence you have to exude through the phone call, and just having a warm voice and like somebody that people want to talk to. So maybe break the ice with some humor, something off the wall that sets you apart from every other cold call that they're going to get that day helps. If you're talking about like, okay, you have that warm introduction, you have a referral, again, like that sets you apart and kind of puts you a step ahead of everybody else from a trust point, whether it be the lender or a friend or whatever. But then, like, we always pride ourselves as an agency. We won't sell a policy to somebody without at least giving them a chance to be educated on it. Uh, there's insurance can get, in my opinion, I think the insurance industry can feel a little scummy in a sense. Like, you're just hawking insurance and making money off of it. And if people don't understand the legwork that you had to do and all the different coverages that they're purchasing, you failed as an insurance agent. We should be a consultant. We shouldn't just be a slimy salesperson. You should understand what you're purchasing. So we need to go out of our way to make sure that we actually take you through every piece of that policy, or at least give you the chance to explain every single piece of that policy.
Yeah, no, that's good. So, I guess one question I have related to you mentioned the name recognition piece at the beginning of your answer. And I'm curious, do you guys do a good bit of like marketing or sponsoring different events that helps to develop that? Or do you feel like we've been around long enough to where we don't need to do any of those events? We just already have the recognition and we just
Yes.
stick with that.
Yeah, it's funny you mentioned that because we literally just got a billboard approved through co-op marketing dollars through one of our carriers. So we get some funding if we do well with our carriers. We get funding to use that towards marketing and stuff. You would know exactly where it is. It's right in front of Northside Dairy Haven, going up 143 to Edwardsville. So yeah, we definitely do have a marketing budget. I think so. I mean, I'm in the St. Louis area, right? And biggish city, not as big as Chicago or New York or whatever, but you know, there's a certain extent of difficulty to stand out as, an agent within that market because it is on the bigger side. You could get a lot of business can get gobbled up just by the bigger agencies on the Missouri side. We're on the Illinois side. But I think we've gone out of our way to really focus on specific communities. We're based in Glen, which is kind of an extension of Edwardsville or partner of Edwardsville. So we really try to make sure we're funding events within Edwardsville. We try to make sure that even in the surrounding areas that we're involved in nonprofits, that we're partnering and sponsoring with nonprofit events. That's our best marketing. It doesn't necessarily buy you business, but it puts your logo out there, and it shows that you're giving back to the community. And I think people want to buy from somebody that is willing to do that. And I guess the side piece I don't want to get super onto. My dad's involved in politics. So there is some cross bleed from that. We try our best not to we try to avoid any conflict of interest, to be clear. But, there's name recognition just in that alone as well, and being out in the community in that way, and him serving as a public figure.
Yeah, no, that makes sense. So I guess one thing I want to definitely spend a little bit of time on is the distinction between commercial insurance and personal insurance and whatever other types of insurance there is that you're particularly working with.
Yeah. So our agency, we try to focus on cross selling. We really try to focus on business owners. So not specifically business insurance. We do a lot of business insurance. But we figure if we get a business owner in the door, we get them to trust us, we're going to potentially bring the business insurance on. We're going to get a shot at the personal lines insurance. We might be able to sell them life insurance. We might be able to sell them group health and group benefits. That's kind of our big overview of products that we focus on. We have financial services that we don't focus a lot on, but we can offer. But we feel like whenever we get a business owner in the door, if we can bring over their entire portfolio of insurance, they're going to stick with us typically. Some of the differences that we see, business insurance tends to be a little bit more, unless it's like a smaller business, whenever you get kind of above like a certain threshold, it tends to be more needs based. So like every business is going to be a little bit different. You can't just kind of intake a business based on like a certain set of questions. We have like a templated list of questions that we'll ask, but usually they lead to more questions, right? Because we really need to nail down exactly what we're potentially covering and what coverages we should offer. Personal lines insurance, we have a very static list of information that we know we will need every single time. And we ask that list and we get all of it. We're looking at home insurance typically, as you would know, as the mortgage lender. But we're also going to we're going to bring in their auto insurance more than likely because it just makes sense to add those together. Insurance companies offer a discount for if you bring your home and auto to the same carrier. And the reason they do that is because they feel that they have a more loyal client, and they also have a client with more skin in the game that they know is going to be a good investment potentially for them. The other pieces of it, you can have jewelry insurance, you could have fine arts insurance, you can have an umbrella policy, which is just a liability extension, whether that be on your home or your auto or both, or even watercraft liability for boats and sea-doos and stuff. That all kind of encompasses within the personal lines world. Now, what's interesting, and I just came from a conference, so we are a Keystone agent and we're affiliated with the Keystone network of agencies. And that's just like a big network of independent agencies in the United States. So my dad and I just came from a conference earlier this week in Louisville, and we all met as Keystone agents and kind of talked about, hey, what are the cutting edge things that are getting incorporated into our industry, specifically as insurance agents. And AI was the big thing. Everybody was talking about AI. We just talked about AI the whole time. And what's interesting is the carriers obviously have more capital to invest in that. Some of the biggest agencies within our network are also investing very heavily in that. We're looking at different ways to do that as well. But what I've seen already is the information that we're asking clients pretty frequently is kind of getting outdated. A lot of these insurance companies already have that data on hand that they can pull from their database. And like one of our companies, Hartford, right now, I'm not exaggerating. It's about 3 or 4 different screens. You put their name in. I don't even remember. I don't even think you have to put their date of birth in. Put their address in, their new address, and maybe like a few other keystrokes of information that they need, like the last 4 digits of their social security number. And it spits out a quote. It's ready to rock and roll. That's crazy on the personal line side. Like usually it would take you 10, 15 minutes at least to quote up something. That's 1 to 2 minutes. So that AI is changing the game on speed and efficiency to get personal lines quotes out.
Do you feel like it's also are you guys having more granular quotes where they're pricing based on more factors than they used to?
Yeah, definitely. We don't see as much of what the factors are because they're hiding it. It's their
Yeah,
secret sauce is kind of
yeah,
the way I explain it. Now, the accuracy of it is the piece of it that's a little tough because we do get granular. Like as an insurance agent, it's our tail on the line if something gets screwed up. So we got to make sure that we look at the like specific to home insurance. We got to make sure that we have every single finish in there. We got to make sure that everything's right because if it's not, then the carrier could come back and they could raise the replacement cost of the home and then they charge more. And that's on us. Like now you got to figure out how to work that out with your client and the lender. So there's definitely a quality control aspect to all the AI.
yeah. No, it makes sense. So I guess as an independent insurance agency, like how does that work? So when I think of the large, when I think of insurance, I think of State Farm, I think of Allstate, I think of these large corporations that are nationwide. Like where exactly do you fit? Are there like certain types of models that everybody fits into one of these buckets? Or how does that all work?
Yeah. So independent. So I think you said before the podcast that you're an independent mortgage lender. You're able to go to multiple different lending institutions and offer, the different loan products, right? Similar to what we can do, right? So we represent multiple different insurance carriers. And currently we have about, I want to say like 12 to 15 personal lines, like 20 total with personal and commercial. And that just allows us to go to that insurance company and sell their product, right? So how we started or how my dad started the agency was he started with 3 regional companies. He had a mix in of different insurance companies as well. And when I say regional carriers, those are carriers that typically focus on a very specific part of the country. They're going to do that part of the country well. They're going to offer good pricing. They understand that market, so they're able to bring on the best. The intention is to bring on the best clients that will make them money, but also that they'll be able to take care of well and provide claim service to and all that. As we've grown, we brought on more national carriers. So like we've had Progressive for a long time. We're growing a lot with Progressive. That's the largest auto carrier actually in the world. I don't know if you knew that or not. You'd think State Farm. No, it's not anymore. It's Progressive. We have Hartford. We have Safeco, which is an extension of Liberty Mutual. That's like the independent independent version of Liberty Mutual. We did have Allstate. Allstate transferred to National General for the independent side of things. So we have them as well. And we're looking at other carriers. One of the new carriers we have is Chubb, that they're really going to power our high net worth program. So if we have clients that have homes over $1 million or really their wheelhouse is 2 million up, that's where we put those. So it's just nice because you have flexibility. You really don't have to say no to anybody.
That's right.
You'll at least be able to offer them something. Now, whether it's the best pricing or whatever, then
Now, I
that
mean, tell
that
me
can
this, if that's the case and that's how you operate, because that's, I mean, similar to how I am, I'm able to work with as many essentially lender partners as I want. And it gives me the flexibility to say, like, different lenders have their own sort of risk tolerances and their own preferences and their own set of products and their own pricing. I'm not locked in to any one particular institution's guidelines, their pricing, their boxes. I just have options. And so I can offer one person can come to me and I'm basically shopping for them with 15 plus different lenders. Why in the world would someone go to one institution that's locked into one program and one set of pricing? Why would they not all go to you since you have access to all these different options?
because
Does
have
that
you
make
seen
sense?
those khakis from Jake from State Farm? Those
Yeah,
khakis are
yeah.
incredible. Like, I mean, it's I like honestly, it's really marketing. Like, I that's 100% what I think it is. Like, State Farm has some of the best marketing in the game. USAA has some of the best marketing in the game. Liberty's marketing is okay. No, I'm just kidding. It's pretty good. Progressive's really good. So I mean, that's the main reason. Like, I think that people get caught up on like, hey, I want to go to this brand because I've had a good experience with them. I see them all over the place. They don't think about the independent sometimes. But like you said, like the independent really does all the work for the client. Like if you're going to bounce around from captive agents, we call them captive, which is just means you can only be with one brand of insurance. So if you're going to bounce around from captive agencies, you have to collect all your information every single renewal, and then you have to go out to the carrier or whatever and figure it out and go get all your quotes and do all the work. Whereas if we get a bad renewal, well, we'll be aware of it, and then we can go out for the client on the client's behalf, and we already have all the information. We might not even have to tell you. We'll just look for you and we'll reach out and say, hey, like we looked around. We recommend that this is a better option for you this time. Or sometimes it's just like, no, this is still the best option we have. If you're not happy with it, we understand, but at least we gave it a shot. And if you need to look elsewhere, we understand. So we look at it. We're not technically a fiduciary. We are from the financial services side, not technically a fiduciary, but I put that hand in hand with consultant, right? Like I kind of always fall back on this when I'm talking to a client face to face. We're not salespeople, we're consultants. Like that's where our value is. I can be a fiduciary because I can recommend what's best for you because I have options to actually tell you what's best for you, right? If I don't have any options, then I just have to hawk and sell my only product that I have and hope that you buy it, right?
Yeah. No, I mean, the distinction between salesperson and sort of like an advisor relationship, I think is something that I try to help people understand. Because oftentimes what happens is people come to me really late in the process, right? They're like, I've got a contract on a house, I'm closing in 30 days. And there's just not a lot of time to like strategize together. But if someone comes to me 2 to 3 months before they plan to buy a house, and they're like, "Hey, here's some of the properties I'm looking at. Can you, like, help me think through, number 1, what makes the most sense for me from a budget perspective? And number 2, how should I think about strategizing offers on these houses? Because there are different ways you can structure offers that can lower your monthly payment or increase your monthly payment or lower the amount of interest you pay over the long term. There's just a lot of strategy that goes into it. And if you don't come to me on the front end, there's just not a lot of time or opportunity to really think through that and put it together in a way that is most advantageous for you and
Yep.
your long term.
Well, and yeah, like you said, there's a level of expectations that you have to set. Typically, the time frame that we give for personal lines quotes, we say, hey, you got probably looking at a week out, typically, right? So if somebody comes to you and they're a week away from closing, like chances are I'm actually not going to get to act on your best behalf. I'm not going to get to go look at all the different companies. I'm going to have to find the one company that I think might work for you and just offer you that quote. And you're either going to have to say yes or no to it, right? Commercial side, I tell it like bare minimum. I tell our clients we're looking at a month out before we get quotes. If I get it to you before that, great. Like, give myself a pat on the back. But if you don't set that expectation but properly, then if I actually tell my commercial client, hey, I can get this to you tomorrow, and then I don't, you lost that sale more than likely,
Yeah.
right? Or you're going to be, even if you do get it done, they're not going to be happy with the process. So I think a lot of our job as salespeople, and I use the term sales loosely because you're a lender. I like to consider myself an insurance consultant. A lot of our job is to properly communicate those expectations and timelines up front. There are no surprises whenever we actually get to each point in the contract, right?
Yeah. I mean, setting expectations, the proper ones is key to
Yep.
pretty much everything. It can
Yeah,
take the same amount of
talk about
time.
your pre-approval piece of things too. Like obviously that's a huge part of it as well for getting to you early.
Yeah, no, I mean that's a key part. So for me, I will not give someone a pre-approval unless I get their income documentation, their asset documents, and I can do a soft credit pull. So a soft credit pull does not impact their credit, but it gives me visibility into any liabilities that are attached to them to make sure there are no surprises. Because there's no like rules around this. A lender can theoretically offer a pre-approval letter without getting the documentation and just say, "Yep, you're pre-approved based on the information you input," and they can roll with it. But then what can happen on the back end is you find out there's issues, you can't buy the house because you don't qualify it for X reason X, Y, Z. So for me, it's very important that you give me that documentation. And so I'm not going to give you a pre-approval letter until you do it. So if you need to write a letter or like an offer letter that night, I'll help you So if you text me at night saying like, "Hey, I need this. I need to put it in the offer letter. We're doing it tonight or whatever they close." Like I get it. I'll come to help you. But I'm not going to have sufficient time to like check every single little box. I'm going to have to tell you up front like, "Here's what we need. Here's what it looks like. Give me the documents." You're going to have to rush too. It's not going to be a simple process where you just ask me and it comes by a carrier pigeon somehow
Sure.
magically. It's going to be like I have to actually get documents from you. I need to review these. I need to make sure that, especially, I mean, if you're self-employed, 9 times out of 10, a self-employed person is going to put that they make $10,000 a year, and I'm going to have to go look at their tax returns and say, no, based on how you do your taxes, you actually make $6,000 a year. So maybe you still qualify, maybe you don't, but we need to have that conversation up front so that you're not getting your heart set on a house, putting an offer, the contract on a house, and then finding out you don't qualify and you lose that $10,000 you just put down as a deposit. So the sooner you do that, the better it is for you to know like what's my buying power, to know any potential obstacles and roadblocks so you can plan and prepare for them. The whole thing, it's just so much more efficient and smooth if you can talk to a lender at the same time you're talking to a real estate agent when you start to think about buying a house. Most of the time, the process flow is real estate agent. Once I have a contract, I go find a lender. No, you need to be thinking more strategically than that. Start at the front end to talk to a trusted lender partner. A lot of lenders have no idea how to think strategically, so it won't be valuable. You talk to a lender, a month in advance, they're not going to offer you anything. But those of us who actually understand the full process and care about education and actually have the resources and tools to put together strategic insights for you, it's going to make a significant difference in how you plan and how you go about buying a home. One thing I did want to ask you, Michael, the last thing is just when it comes to things that your clients don't know or aren't aware of that you wish they were, like what's the most common thing that you would say, I wish everybody knew this?
So there are some specific insurance coverage things that I could really get into, but honestly, I don't think that affects the client as much as it affects my ability to explain it, right? Like if I properly explain everything, then they don't really need to know about those as much. I think the thing that people are most interested in right now is our rates. And so they want to know where their insurance rates are headed. They want to know how it's going to affect them. Everybody is, I feel like economics wise right now, people are feeling a little bit of the crunch. And I think insurance has been a big part of that, unfortunately. Because we've been in what we call a hard market for 2 years now. And honestly, could end up being a lot longer than that, unfortunately. We're seeing things steady out a little bit, but also the major storm events that we've been seeing and the amount of insurance damage that's occurred from them still have carriers a little bit wary. So we have a lot of I'll go ahead. I looked like you were going to say something.
Oh yeah, I was just interested. So you mentioning that, like you talked about how you worked with some regional sort of carriers. Could that potentially help you if your regional carrier is in an area that is unaffected by natural disasters like that?
It does. It's funny though, because our regional carriers, so the Midwest gets hit with a lot of hailstorms. Um, and what we've seen as a result of that is the market get flooded with roofing contractors that can potentially do an entire roof for $1,000 deductible, or at least it was that way before 2 years ago. And man, that's a great deal for not just the client, but it's a great deal for the roofer. There's plenty of business. Hailstorms are what they are. They do damage to the roofs. It's typically, a straightforward insurance claim unless the carrier decides to dig their heels on and can kind of contest the damage. So that's what we see a lot of in the Midwest. But what's happened is, like I said, great deal for the client, great deal for the roofer, horrible deal for the insurance company. They're losing money hand over fist every single time that these huge hailstorms come through. So what we've been seeing in our area with the regional carriers and also national carriers is you've been seeing a percentage of wind hail deductible mandatory from the get go on these houses. Typically, it's been 1%, or at least that's where they started us. 1% of the home insurance value. So let's say it's a $300,000 home. You're looking at a $3,000 deductible, right? I'm seeing these get significantly higher, unfortunately. Like 2% kind of becoming the kind of standard now. I'm seeing on the commercial side, typically like a 5% wind hail deductible can get pushed if it's a larger exposure. So that's, a problem for the client because it's more money that has to come out of their pocket when a storm event like this occurs. And that can damage your roof, that can damage your siding, gutters, and it can end up being a very large expense. But the deductible is always a percentage of the insurance value. If you're looking at to calculate it, 1% of 300,000 would be 3,000, or 2% of 300,000 would be 6,000. So whenever the insurance client is considering their home policy, they should check there, especially if you're in our area. What I've been seeing with regional carriers, which is interesting, like you said, is they've actually been diversifying their exposure. They've been entering markets that they consider to be lower risk, like Arizona's been like gangbusters. Everybody wants to go to Arizona right now, which is interesting to me. I don't know anything about Arizona, but it seems like a nice place to live. But they're all entering that market, and it's just a way of them getting out of this wind, hail funnel, tornadoes potentially too, and like finding themselves in a different market that potentially won't get hit by all the storms and could have a better year. And it allows them to diversify their books a little bit. So that's typically the way that they try to find success to avoid these major storm events.
Yeah. I mean, that makes total sense to me. I mean, insurance companies have to make money too, because they have to be able to have money to pay claims. So it's not like a free service that they're just offering to everybody for
Yeah.
nothing.
Well, it's funny though, because that's the hard part to explain, especially I feel bad for clients that have never put a claim in before and then they have a bad claim experience because like they've done everything out of like, an honest mindset. They weren't trying, they're not trying to work the system. They're not just looking to make money off the insurance company. And then just the way that the insurance market has changed, they could end up with a raw deal sometimes. So that part's harder to explain. And you try your best, and you're kind of just the middleman. And a lot of times you have to you want to side with your client because you really do feel bad for them if they get a raw deal. But also we represent the insurance company as well, so you're straddling the fence a little bit, and it can get awkward a little bit. I'm sure as a broker you deal with that too.
Yeah. I mean, I have to relay decisions that lenders make and decisions that underwriters make and say, yeah, I may not agree with it, but that's the way it is. And so we're going to have to find a solution to it, or we're going to have to think about something down the road. We'll have to wait, whether it's, you may be a risk averse client in every sense, but there are certain guidelines that they just won't budge on, and it is what it is. And I don't have any authority. Like, I know you're not going to default or on your mortgage. I know you're not going to foreclose, but they don't know that, and they've got to treat things in more an aggregate sense, because they can't just give all these one-offs all the time to random people that they don't have any reason to treat differently, even though that I know that you would be a different sort of example. So
Yeah,
uh,
and I would say like that is one piece of it where even if you don't go with a broker, like, well, let me start with this, Jordan. Are you licensed in every state?
I'm not licensed in every state. I'm licensed in 10 states.
Okay. So I did want to follow up with a question on that after this. It's extremely, extremely important for clients to find like the trust piece of it. We keep falling back on that because it's so important. You need to find an agent or a broker that you trust, but you also need to find one that is competent, because if they're competent, they can advocate on your behalf better than you will be able to the insurance company. And so you mentioned one-offs, like that is something that we're able to do for a client that we trust. Like if we think that they're doing it, with full intentions of being, honest and truthful, and we feel that they're a good client and we want to retain them, we will go to bat for them. And I'm sure you'll do the same. It's a two-way street on the trust relationship. So if we trust you, we want to write your business and we want to retain your business. So we're going to go to bat for you with the carrier. So I want to circle back because I thought of this question a little bit earlier. So you're licensed in 10 states, and but you're not licensed in some. So how does a person that's looking to potentially purchase a home, how do they figure out, like, how can I find a lender that I'm going to trust? How am I able to sort through all these different people that can offer products for financing.
Yeah, I think there's two ways most people go about finding a lender. One of them is they Google or they go to ChatGPT or whatever it is, and they ask who should I go with? Who has the best rates? That's always the question people ask is who has the lowest rates? Because that's the only question they know to ask. They don't know to ask all these other questions about like process and all this kind of stuff. The other way they'll do it is they'll have referrals from either their real estate agent they're working with or close relationships that they have personally. You know, their dad or their brother just closed on a loan with somebody and they said, "Hey, it was awesome. This person's great." And so you'll have sort of a direct personal referral that way. People who are more rate conscious and rate sensitive oftentimes will be the ones Googling things and trying to find stuff, putting their information into these random websites that like Bankrate and other places that will give them, hey, here's a list of 10 lenders that have low rates. Part of the issue with going that route is oftentimes when you go to those locations, the rates that they're showing you are requiring you to pay a certain amount of discount points to get that rate. And so without explaining all the discount points are, it's just basically you're paying a premium to get a lower rate for what it is. And so their actual like par rate where you're not paying anything to get it is identical to pretty much everybody else. Pretty much everybody's priced within a half point of each other. So if interest rates right now are 6.5 and you go on the internet and you find somebody showing a 5, there's something going on. They're making you probably pay 2.5 discount points to get there. The other lenders who have 6.5 can do the same thing. They can charge you discount points and get you down to whatever you were wanting to get to, but you're going to be paying 10, 15, $20,000 to obtain that lower rate, and that's probably not going to be advantageous for you. The average person stays in a mortgage loan 5 to 7 years. Paying $20,000 up front to lower your interest rate by a point or a point and a half doesn't make sense in that scenario unless there are certain factors at play. So a lot of times people go on the internet, they have bad experience, they go to Rocket, whoever else, because it's some random person on a phone call somewhere in Arizona maybe, and they get transferred to like 10 different people. They get handed off to these people they've never met, they don't know. It's a bad experience. And then they have the personal referrals, which seem to be a little bit stickier, where they go talk to somebody and they find, hey, I can trust this person, or this is my own local community bank. I just walked in, I've got all my money here, so let me just talk to somebody here. And that's usually how people are going to find a lender. So it would be just they're on the internet searching for the lowest rate is probably the most common. And then you have the referrals from a real estate agent or from a trusted advisor or friend or family member, or I guess you could just walk into your own bank and ask them. But oftentimes, your credit unions and your community banks are not going to give you the best rate. So if you want the best of both worlds, you should go to someone who has a local, regional presence. I don't think they have to be in the state that you're in or even in the city you're in, but I think they have to be more of like a regional type of institution that doesn't have like 100 branches across the country, because that's where you can get lost. There's nothing necessarily wrong with it, but if you want that personalized experience, usually you have to find the smaller groups that are more dedicated. Their business model's more dedicated to that and dependent on that.
That's a good
Does
answer.
that somewhat answer your question? I know I
Oh,
rambled
totally.
for a little bit.
No, I think that's really good, and like like you said, that's where the broker relationship comes into play. Let the broker do the work for you. You
Yeah,
know,
yeah,
there's no
absolutely. There's a statistic that came out 2 years ago. A research group did some work on the differences between brokers in housing and mortgage particularly versus, like, retail banks and credit unions. On average, they had concluded that a broker was saving consumers, like, a little over $10,000. Like, do you like saving money? Do you like having somebody who's, like, there for you all the time? But what I tell people is, like, you can go to a bank and have a probably if you know the person, you probably have a good relationship with them. That's great. But they close on Fridays at 5 o'clock. They may be open on Saturday, they may not be. They're definitely not open on Sunday. If you work with me, you have my cell phone and you text me at Saturday night at 9 p.m. saying I need something, and you're going to get a response. That's a significant difference, especially in an industry where things move fast, especially depending on where you live. And if houses are getting multiple offers, you need someone who can do what you need quickly. Now, obviously, if you strategize and plan up front, you probably don't need that as much, but there's still going to stuff that happens. And like you found a house that you really like and everybody else really likes, and you need your lender to be there to help you. And so if you work with a bank, you're waiting until Monday and they close the offers on Sunday night. So you're out of luck. But if you work with somebody who's there, it's going to make a difference.
I 100% agree. I try to explain to clients there really isn't a value that you can fully put on that. Like, you could go to the captive agency down the street. You might save a couple $100, but having a broker and like again, like I'm not knocking on captive agencies because if you get a good agent, you're probably in good hands. Like that's part of what you need. Like you need somebody that's gonna advocate for you. But the value that you have from having somebody that can advocate for you, not just with the one carrier, but multiple different carriers, is kind of priceless. Like just makes your life so much easier as a consumer. So
Yeah.
we definitely, whenever you're explaining to people so I, I'm gonna go to the commercial sales side of things for me because part of that is selling yourself, right? Like I'm not just talking to the product there. You don't get to the bottom line as fast. And there are so many additional services and so many additional coverages that would need to be taken into consideration during a process of transferring over somebody's business insurance to you. So the more that I'm able to show up front, like, hey, I'm going to advocate for you. This is the list of ways that I plan to do that, and actually show that in a sales meeting, and then actually follow through on those in the first year or so. So something that I pulled away from this Keystone conference was the prove it list. So up front, I write this list of things that we talked about, and I say, hey, these are the things we're going to look at doing for you. These are the ways that we're going to improve your risk profile to the carriers. These are the different ways that we're going to try to save you money. These are some of the ways that we're going to at least consider spending more money to long term save you more money because you're going to look better to the insurance carriers. You're not losing them money. You're helping them in the risk transfer partnership. And then I can fall back on that at a renewal meeting in a year because the insurance term is typically a year, right? And I can say, hey, we did this. How do you put a price to that, right? Like you have some other insurance agent coming in and saying like, hey, I got a better product for you. Well, do they have this whole list of things that we actually did that prove it? Like, no, they don't because they haven't gotten a chance to do that, but we have. So what's the point of switching over a couple grand, right? There isn't. Even if we're a little bit higher, the if we did everything that we said we would and we actually follow through like that's priceless. So those are the clients that understand that. Those are the clients that we want to try to keep around because that actually becomes a good business relationship where we can grow together and you're not keeping your insurance agent on his toes. He's not freaking out and like worried that you're going to leave him over a couple grand. And we're not like, we're creating a stable home for your insurance.
Yeah.
And like in business, stability is key, right? Like, and you need that as well on your personal line side. If you have a stable home and you know that you like whatever happens, regardless of whether the carrier screws me or not, and they do sometimes, right? Like I know I have an agent that will find something better for me and allow me to get in a better situation, and make sure that I'm taken care of in the long run. So that's what we try to sell. We try to fall back on that. So I'm sure that's similar to your
Yeah.
field as well.
Absolutely. I mean, people don't think about the amount of time that you can save them and what that translates into for like actual cash value for them. If you just save them 20 to 30 to 40 hours, I mean, what are they investing in that in and what are they like producing from the
Yeah,
savings that they're getting from that? They're not
totally.
someone who's really like forward thinking and like understands the value of time will get that immediately. You know, there was a long time where like I wanted to change my own oil and I wanted to do all these things. It's like, oh, I'm going to save a couple bucks. But then I started thinking, I'm spending how many hours doing this versus like I can spend just this much money and let somebody else do it and save all this other time to go then create more revenue in another way. So there's like all sorts of like small things that I think people don't think through that saying like if I get my time back, I can actually make more money than I'm spending and thus produce more.
My wife Leah and I have that conversation so often because I'm not handy. I know, like self admittedly not handy. I just know I'm not. And I don't really have any desire to learn to be like, there are certain things I guess I dabble in. She wants me to do certain projects around the house that she sees on HGTV. She's a great designer. She does an awesome job with our house, makes it look really, really nice. I don't know how much you can relate to this. And I'm just like, babe, like, I know that you want me to do this and I'd love to do it for you, but I'd rather just go sell more insurance and pay for it and pay somebody that, like, it doesn't matter. Here's the other piece of it. You're the expert, right? I'm the expert in the insurance field. The client or myself in this example, I could put 30 hours of work into carpentry labor and it's still going to look worse than the professional carpenter that comes in and does it in 3 hours.
Yeah,
No
absolutely.
matter what, right? So, like, not only are you saving them time, you're doing it more efficiently, more effectively, and you're able to make the product look so much better at the end of the day
Yeah.
than the amount of brain power. I always tell people this in the sales meeting. I go, especially if it's a super complex thing. I go, nobody likes insurance. Like, I don't even like insurance sometimes. I see people's eyes glaze over when we talk about it sometimes. I go, you don't need to bang your head against the wall. You don't. That's my job. Let me bang my head against the wall for you over and over and over again until we solve this problem for you. That way you can actually go do things that you want to do because nobody wants to do insurance. Nobody does. And I'm
Yeah.
okay with that. Like, that's why the value that we have. So I always use the bang your head against the wall line because I think people think that's hilarious.
Yeah,
But in
no.
reality, I'm probably actually doing that sometimes. So.
For the longest time, though, when I was especially when I was younger, I had this mentality of, like, experience means nothing. It's all about just, like, do you just wanna work hard? And then I realized after getting a bunch of experience, oh, there's actually all this value in, like, being an expert in something that makes you so much more efficient and better, even if you have someone who's just really hungry. I don't think you can discount the value of hunger and motivation.
Totally.
But there's a serious undervaluing, at least from my experience, of just what, like, expertise and decades of experience doing something gives to you and gives to someone. So your example of the carpenter, I think, is exactly spot on. But man, we've had an action-packed episode here, so we're gonna end it
Woo!
here. Michael, if people want to find more about insurance or work with you guys, do you guys have what's the website that they should go to find your contact information?
Yeah, so we are at Babcock IFS. So BABCOCK as an insurance, F as a financial, S as in services.com. You can find me on LinkedIn, Michael Babcock. You can find we do have Facebook as well. Social media is not our expertise. We do insurance. So if we do post stuff on social media, if you find any of it interesting, it's not because of me. It's because of some automated person that goes and does it, and we just send it out there. So
Awesome.
if you want to actually interact with us, I'd just say reach out to me. I'm happy to answer any questions in the insurance space. If you find anything interesting, or even if you're interested in, like, getting into this industry, like, happy to answer questions about how you can go about doing that. But thank you. I think I really appreciate the opportunity. Really enjoyed it. And again, like I said, way too long. Let's catch up off screen, or we can do another one of these. It's, beneficial for us. We can just shoot the breeze and have a good old time. So,
Yeah, I love it. All right, man.
yeah.
Thanks, Michael, and thanks for everybody tuning in. Look forward to sharing more with you guys soon.